You've probably heard the term revenue before, and you might be wondering what that means. Some people just think, oh, revenue is sales and that's that. However, there's a little bit more to it than that. In this video, we're going to define revenue specifically and then give some examples of the different types of revenues that exist. Now, the definition of revenue that we have is pretty complex, but I'm going to break it down, and then I think by illustrating with an example, it'll be a little bit easier to understand. So when we think of what revenue technically is, we're thinking of inflows, of enhancement of assets, an increase in assets somehow, or even a settlement of a liability, something like unearned revenue becoming earned. That is basically resulting from some kind of event. You delivered or produced goods, you rendered a service if it's a service firm. There's some kind of activity that generates some kind of enhancement or increase in the assets. But here's the key, and here's what distinguishes revenue from something like a gain. It has to be somehow related to the firm's core business operations. So let's give ourselves a little space here. You might have heard of a firm having a gain or loss. So you say, okay, there's some kind of gain on a transaction, and then we think about revenue. We say, okay, well, what are some types of things here that are different? Well, when we think of revenue, we've got sales revenue from sales, and then we've got revenue from interest. Put money in the bank, we want to earn interest. We invest in other firms, we have dividends, dividend revenue. So we might even have some rent revenue if we have real estate, we intend to rent it, we're a real estate firm or something like that. But now a gain, this is typically more like some kind of one-time item or something that really isn't related to this idea of the core business. It's not really how we make money. For example, we have some asset that we're not really holding with the intention of making money on, but it's old and decrepit, and we decide, oh, we're going to sell it, so maybe this is some kind of one-time thing or an asset. Let me just give an example. This might be a little bit easier to understand. Let's say that you own a restaurant. So let's think about what are the types of things that would be revenue, and then what are the types of things that would be a gain. Something that really just jumps out with a restaurant is obviously if you sell food. So you have a restaurant, you make food for people. So you sell food, you sell soft drinks, you sell all these different types of things. Maybe you have some extra money, you put it in the bank, you put some money in the bank, and you earn interest on it. And this is basically how you're making money, right? You're preparing food, and you're selling that food. Now, when we think about a gain, let's think about something like your work truck, right? So you have a work truck that you use every day, you have some pickup, and you bring food to the restaurant, and it gets old. And you say, I want to sell the truck, so you sell this truck, and let's say that you had bought it for, let's say $100, and now you're selling it for $150. Let's just ignore things like depreciation and make it really easy. So you sell it for $50 more than what you paid for it. You have a little enhancement here of your firm, right? You have something that happened. What do we call it? We call it a gain, right? You have a gain. Now, it increases if we think about the income statement. If we think about the income statement, both revenue and gains are going to increase net income, right? All else equal, if we have a gain, we have revenue, these things increase the profitability of the firm. But what we're doing is we're kind of separating these things out on the income statement so that investors or whoever knows that the gain really isn't related to the core operations of the firm. You own a restaurant, you don't make money buying and selling work trucks. That's not why you got the work truck. Now, if it was a car dealership and then you bought and sold a truck, now that would be revenue in that case. So basically, we need to think about the firm, think about what the core operations are, and the core operations are going to have to do with revenue, and then any other kind of inflow or something is going to be a gain. And that's it for today, guys. Thanks for listening.